Hi everyone, my name is Andrew and I work at Fullstack Advisory in the grants and incentive team. Welcome to this presentation on early stage innovation company benefits and requirements. Just as an initial disclaimer, the advice in this presentation is general in nature and shouldn't be relied on in making financial decisions. You should always seek advice specific to your circumstances because they may be different from those presented here. So just to tell you about Fullstack Advisory, we're a tech accounting firm founded in 2017. We really try and be the one-stop shop for startups, helping with corporate structuring, accounting, and grants and incentives. And so if you need help with any of these, please reach out to us. We're always happy to jump on a call and provide some assistance. So getting onto the topic of today, the Early Stage Innovation Company Program, also known as ESICs. I'll start by outlining the benefits of investing in ESICs as an investor. The first benefit is tax offset against your personal tax liability, equal to 20% of what you invest in the ESIC, up to $200,000 tax offset. So that would cover $1 million investment in an ESIC in a given financial year. That offset is non-refundable, but it can also be carried forward. The second benefit is that there's no capital gains on shares held between 12 months and 10 years. And after 10 years, the cost base of the asset is considered the market value of the share at that 10-year mark. So the main benefit of being an ESIC as a company is that it should help with capital raising because of these tax concessions. And many investors who qualify as sophisticated investors, which we'll discuss next, will also ask about your ESIC status or want to know how you qualify as an ESIC. So the requirements for a sophisticated investor are to hold a certificate from a qualified accountant confirming that you meet these asset or income criteria. So you need an income of at least $250,000 in the last 2 financial years, or you need net assets of $2.5 million. That is the main way that people qualify as a sophisticated investor, but there are alternative ways under the Corporations Act. These include having invested at least $500,000 in the qualifying shares, receiving the offer through a financial services licensee without a disclosure because the licensee has determined you have the competency to assess the investment without that disclosure. Or you can qualify as a professional investor under the Corporations Act. That would be a financial services licensee themselves. Or alternatively, again, you could possess or control gross assets of at least $10 million. If you don't meet any of these requirements, then you won't qualify as a sophisticated investor, and then you're limited to investing $50,000 in ESICs for a given financial year. That would be a $10,000 tax offset against your tax liability. If you exceed that $50,000 limit, then you'd lose all entitlements to the CGT treatment and also the tax offset. So moving on to the requirements for companies wanting to qualify as an ESIC, there are 2 main components. As the name suggests, there's an early stage test and an innovation test. The early stage test is quite black and white and it's shown there. You need to be registered on the Australian Business Register within the last 3 years with total expenses under $1 million and assessable income under $200,000 in the previous income year. You can be registered in the last 6 years, but the company must have an average of aggregate in the last 3 years. For the early stage component, that can be satisfied under 2 different tests. You only need to satisfy one of them. The 100 points test provides points for different things like R&D tax submissions, receiving an AC grant, participating in a public accelerator program, or having or acquiring intellectual property rights. If you don't qualify or meet the 100 points test, or you don't accumulate 100 points under those allowances, then you can qualify under the principles test. There's a bit more discretion in whether or not you qualify under the principles test, and private rulings are available from the ATO to ensure that you do qualify. So the 5 requirements are shown there. They are that you have a genuine focus on innovating for commercialization, that you have high growth potential, you have a scale-up capability, a broad addressable market for the innovation, and that your innovation will confer some competitive advantage for your business. So when is lodgement required? You are required to report to the ATO if you issued new shares in the financial year. and investors may claim ESIC tax benefits for those shares in the future. The process of submitting the report is required. The process is to submit the report within 1 month of the end of financial year. So that's usually by July 31. You need to declare in that report how you've qualified as an ESIC. So that can be under the 100 points test or principles test. And then finally, you need to detail the specifics of that investment. So mentioning, the name of the investor, the share quantity that they've acquired, the ownership interest in your company as a percentage of total ownership, and also the purchase price paid by those investors. There are also some exclusions that you should watch out for. So the exclusions that apply to your investments are all shown here. Most common are the affiliate exclusions, the failure to qualify as a sophisticated investor and then investing too much in the ESIC or a range of ESICs. And then finally, if you acquire the shares through an employee share scheme, then that investment won't be eligible for the modified CGT treatment or the tax offset. So how can Fullstack Advisory help? We assist mainly in determining whether or not you need to actually report to the ATO in the first instance. If you do need a report, we can help you prepare and submit your end-of-year report. And we can also assist in applying for a private ruling under the principles-based test if you need to. We can also help companies qualify as ESICs through the R&D tax program. Obviously, there's 75 points available for companies who have registered 50% of their corporate expenditure under the R&D tax incentive. And so that's another way that we help companies qualify as an ESIC. But if you have any questions about any of those, please feel free to reach out. And then the eligible criteria. We incorporated our company in 2021, commenced R&D in August 2022. Is that within the eligible time of 3-year criteria? Yeah, I believe so. I think if you incorporated it depends when you incorporated in 2021, it would be 3 years from when you're reporting. So I think if you incorporated after the end of financial year in 2021, then you should be able to register as an ESIC. But there might be, timing and durations with that. There are test times for when you qualify as an ESIC. Just clarify, does the ESIC or the investor need to lodge the report within 1 month? So the company that believes that their issue of shares will result in an investor claiming these CGT benefits in the future or the tax offset, that company will need to report to the ATO. So in that financial year. I think I'll say thank you all for attending today, and I'll follow up on this SAVE investment and how it contributes to your accessible income after this month. But thank you for your questions and thank you for attending today. Goodbye.